remain the top Nifty contributors.
Aviation Motors revs up on healthy Q3 volumes, market share gains and strong margin improvement on better mix and price increases, while a mega 70,000 unit Indonesian order powers up Tata Motors. M&M reports inline set of numbers.
Apollo Hospital injects optimism into healthcare stocks after a strong Q3 show on resolution of issues with insurers, and makes the healthcare major adds that the discussions with the Delhi government on the JV Indraprastha Medical Care are on.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Sonal Bhutra. With me is my colleague Ekta Batra. Ekta, good afternoon. Quite a quiet day, you have to say, for the Nifty. It was absolutely flat by the time we ended the trading session. Bank Nifty did outperform, so that is something which was batting for the bulls. So that index was up around 0.2%. But other than that, it's the auto index that had a lot of action. We'll discuss that in greater detail, of course. PSU banking index made a recovery. So that is the one which was on our radar. Pharma index did well as well, but the Nifty IT decline, that continues. That was the top loser as far as sectoral moves are concerned. But all in all, you have to say some volatility, but then post that a very quiet end.
Hi Sonal. Well, yes, absolutely. It was an overall very quiet day for the markets today, just about range bound. There is resistance which is coming in at the 26,000 mark currently for the Nifty. So let's see whether we manage to break through that level. But overall, it was autos, it was banks which really contributed on the upside, along with stocks such as Reliance Industries as well, which went home with gains of around 0.7%. Let's see if the mid caps managed to see some amount of traction. It was a little bit of a choppy session for them, but extremely range bound, you'd have to say. But let's tell you all of the big news and key developments on the Lal Street today. Top corporate voices is what we have lined up for you, as well as the events to track. Let's kick off the show with the day's market action. And in fact, let's tell you what we have. We have Sudarshan joining in to tell us about all of the movers and shakers in today's trading session. So let's go across to him.
So while market was largely flat after a range-bound session, but we did see some stock-specific actions. Aviation Motors top Nifty gainer, followed by Apollo Hospital. So first about Aviation Motors, posted a strong set of earnings. Margin has come at a 5-quarter high of 25.5%. On the back of that, we have seen a big move. Stock has closed with a gain of more than 6%. Apollo Hospitals insurance has helped company to report a healthy set of volumes in Q3 FY26. Even outlook is looking positive as far as the commentary that we have got from the management, and that stock too has closed with a gain of almost 4%. SBI continues to see an up move, and for the consecutively it remains the top contributor to Nifty along with Reliance, and today also that stock has seen a gain of more than 3%, and it's at a record high. BHEL though has underperformed, closed with a cut of almost 6%, and it's on the back of government's announcement of selling up to 5% stake via OFS. And for non-retail, OFS had opened today, and for retail it will open tomorrow, and indicative price so far is around the floor price of rupees 254 per share. Bharat Forge was very active ahead of the earnings tomorrow. The stock has closed with a gain of almost 4%, and it's at a record high. Vodafone Idea has been moving higher, and it's on the back of the buying of shares by Kumar Mangalam Birla. Since January 13, he has bought almost 7.83 crore shares, and if you take a look at the average price, it comes in the range of 11 to 11.30 rupees per share. Torrent Power has moved lower. It had seen a big move yesterday ahead of the earnings, but when the earnings came, it has come out that one-offs had impacted or basically lifted the earnings, and because of that, the stock should be Torrent Power, not Torrent Pharma, and today that stock has closed with a cut of almost 4%. AB Capital and L&T Finance have seen profit booking after MSCI announcement, and both these stocks have been added in the MSCI Standard Index, and will see inflows in the range of $240 to $250 million, and these changes would be effective 27th of February. And last one is Indraprastha Medical. You would have heard Apollo Hospital management and saying that company is in active discussion with Delhi government. Both Apollo Hospital and Delhi government hold 26% stake each. So we'll see if Apollo Hospital goes ahead and increase the stake in Indraprastha Medical. That stock too was buzzing in trade.
Take that point, Sudarshan. Thank you so much for joining in. Some interesting names there. Let's take this discussion forward. We are now joined with by Mayuresh Joshi from Market Smith India. Mayuresh, thank you so much for joining in. Very quiet day for the markets, but did anything stand out for you specifically if we talk about some of the stocks that Sudarshan also mentioned? Any sectoral fundamentals that you wish to speak about?
Afternoon, Sonal. Again, I think selective autos and auto ancillaries did stand out in today's trade as well. Specifically auto ancillaries, I think good set of numbers that probably came through. And a base case scenario that is now getting built in is that both OEM and the replacement market are firing on all cylinders as we speak. Input costs remain benign, and therefore volume and value-led growth will probably lead to top-line expansion over the next few quarters structurally. With input cost expected to stay benign, margins should be relatively better as well. And with better cash flows and better leverage management on a lot of auto balance sheets, that has played out well. Even for autos, I think iShares numbers were far better than expected. M&M in line with estimates as we speak. But generally, auto banks as a sector stood out. PSU banks, and within that State Bank of India continues its stellar run. The risk reward still probably looks reasonably placed for the entire universe as we speak. And there is some element of expectations in terms of banking reforms, which might positively act as an enabler and a catalyst for the sector as well.
Okay, yes, absolutely. Well, Mayuresh, we're just going to come back and ask you about the auto stocks in just a second. But let's in fact get Sudarshan to tell us about the entire auto space which was buzzing in trade today. He's joining in with a wrap on all of the auto stocks that were in focus on account of numbers. Remember, stocks such as Eicher Motors hit a record high in today's trading session. Sudarshan, over to you.
So it's largely been a good day for majority of the auto companies which have reported earnings so far. So three major names, Mahindra & Mahindra, Eicher Motors and Ashok Leyland, are in the focus on the back of the earnings of Q3 FY26, and all these companies either have reported earnings which are largely in line or say better than expectations. So we'll start with Mahindra & Mahindra. An Argo company has come out with Q3 FY26 earnings. Both the segments, auto and farm segment, have been seeing healthy volume growth. It was up 23% YY in Q3 FY26. That has helped company to report a double-digit revenue growth. On the consolidated basis, Mahindra Group has reported revenue of more than 50,000 crore for the first time ever. Now on the standalone basis, profit was up 33%, revenue has increased by 26%, EBITDA too has seen a jump of 27%, and margin was in line with expectations and has come at 14.7%. Going forward in FY26, company is expecting tractor industry to see a growth in the range of 20 to 24%. Even SUV is going to see a healthy growth because the demand for the recently launched vehicles remains strong. Coming to the Eicher Motors, top Nifty gainer, up more than 6%. On the volume front, company has been doing good, but on the margin front, there was a concern till Q2 FY26, but in Q3 FY26, margin too has come at 25.5%. That's at a 5-quarter high, and after several quarters for Eicher Motors, EBITDA growth has outperformed both volume growth and revenue growth. And on the back of strong volumes for both Royal Enfield and commercial vehicle, revenue for the company has increased by 23%. EBITDA has seen a jump of 30%, and margin, as I told you, it has come at 25.5% versus 24.2%. And going forward in Q4 FY26, company is expecting strong demand to sustain, and even in FY27, motorcycle industry is expected to see a high single-digit growth. Coming to Ashok Leyland, it has come out with its earnings. CV volumes have been strong, and majority of the companies have been saying that the CV is in up cycle, and in Q3 FY26, Ashok Leyland has seen volume uptick of 24% YY. Even on a sequential basis, there was an increase of 17%. And despite a sharp increase in the raw material cost, company has reported an increase in the gross margin if you compare YY. But on the back of strong volumes, revenue has increased by 22%. EBITDA has seen a jump of 27%, and margin has come in at 13.3% versus 12.8%. Stock has seen a downtick after the earnings, but remember, after Q2 FY26, in the last 3 months, stock has seen an up move of more than 50%.
Okay, all right. Thank you so much, Sudarshan, for joining us with all those details. Mayuresh is back with us. Mayuresh, these names on the back of earnings, there have been order wins as well. What do you make of the auto space? And do you think you would play the auto theme by auto anchors or plain auto stocks which have been buzzing of late?
Sonal, I think honestly it will be a mix of both, and we own a mix of both in our global portfolios and our local portfolios as well. Case in point, I think M&M, very strong set of numbers. I think the management commentary is pointing out that both the auto side of the business in terms of expectations of new SUV launches over the next few quarters amidst competition intensity and pricing pressures as well might continue doing well. The farm equipment segment is expected to hold on with even better growth going forward, with a better Rabi season expected and a better Kharif season in the coming year as well. The two-wheelers specifically, I think Hero MotoCorp as an example, I think we are hearing in terms of how competition intensity will play its part. But both aspects in terms of its core portfolio as well as its EV offering through VIDA, I think that should probably do well. Tier 2, Tier 3 cities, as they come back very, very strongly, I think that should affect Hero's volumes going forward. And as I mentioned earlier in my remarks as well, auto anchors as a space should benefit from the OEM and the replacement ecosystem, both in terms of volumes as well as bottom line growth, specifically in terms of margin improvement going forward.
Okay, all right, Mayuresh, that was the auto space, but I was looking at the hospital space today. A lot of the healthcare stocks did well today, and that was on account of possibly Apollo Hospitals, coming out with a good set of numbers. So that aided sentiment. So we had the average revenue per patient, which was up around 11% for them. In terms of Apollo Healthco, it reported its lowest ever digital cash loss of around 29 odd crores. Now, triggers for the hospital space, they've reached an agreement with insurance companies after the disruption of cashless services. So Apollo Hospital says the insurance contracts have now been tied up for 2 years. So that should be a positive for companies such as Max as well as Apollo going forward. Separately, the CGHS revision was announced in October. So that should take place in terms of more formidable earnings accretion going forward in FY27. So for example, Max says that it could add around 200 crores in terms of positive EBITDA. Other triggers, the budget has proposed a scheme to support states in establishing 5 regional medical hubs for medical tourism. So that too would be something that the street would watch out for in terms of additional contribution. Capex, they remain steady on Capex. So for example, Max is adding 3,000 beds. We have Apollo Hospitals, which is adding around 4,400 beds going forward. But the stocks have come off compared to their 52-week highs. But in terms of valuations, analysts are quite positive that maybe there could be some amount of upside on these healthcare stocks as compared to their earlier highs. Mayuresh, would you agree that maybe there's some amount of upside in terms of these healthcare stocks?
Absolutely, Ekta. And I think all the 3 triggers will probably benefit them going forward as well. I think the medical tourism as an aspect, I think that is going to pick up steam over the next few years. I think it's still a minuscule part in terms of overall revenues as far as major organized hospital chains are concerned. But as it gains steam and the budget impetus that has probably been given, I think that can add a significant amount of revenue stream to hospital chains. The second element in terms of bed additions that they're probably doing, I think the calibrated capex that most hospital enterprises are probably going through is a step in the right direction, because what they're probably doing in terms of bed additions and the capex that they're doing for that, example, I think Apollo 4,500 beds being added at a capex of 8,200 odd crores over the next few years, will mean that the leverage component will not shoot up significantly as we speak, and it gets spread out as the capex gets spread out. The asset light model in terms of carrying out managed hospitals or managed beds in tier 2, tier 3 cities also works in their favor. Obviously, the CGHS guidelines will aid and abet the overall revenue growth as well. So yeah, I think as a space, it should continue doing well.
Okay, in fact, we did talk to the Apollo Hospitals management earlier in the morning. So listen in to what Sunita Reddy had to tell us.
So there was an extra 8% volume increase from insurance with a 20% revenue increase. So this will continue, and with this, we should be able to get higher occupancy metrics. Insurance enabling patients to enter the Apollo system for robotics, for transplants, improvement in cardiac work by 20%, onco work by 18%, orthopedic 17%, and gastro 17%. This has all led to a higher ARPP.
All right, that's the word coming in from Apollo Hospital. So we've discussed a few of the top gainers on the Nifty, Nifty Auto, Nifty Pharma. Let's come back to Nifty Realty. Mayuresh, 0.6% higher on that index today. It is now down around 18% from the 52-week high levels. Last week we were talking about it being off around 30%. So there's definitely been some recovery. What's the indication now? Do you think they are at reasonable valuations, or there could be further derating of these names, considering that demand, of course, is not bad across the board, but it could see slower growth going forward?
Well, you're absolutely right, Sonal, and I think that's what is probably the pain point for most realty stocks, and therefore you need to probably have a very stock-specific approach for the sector as a whole. I think three aspects. One, I think in terms of demand dynamics, inventory levels are inching up as we speak across metro cities, whether you take Delhi, Pune, Chennai, Bangalore. And to that extent, I think how these levels will play out in the next few months and quarters is something to be watched out for. The second element is that in terms of pre-sales, the new launches have been very, very selective by key players as well. And that is an indication in terms of both the mood and the sentiments as far as the real estate market is concerned. Now, with lesser pre-sales launches that are expected to take place, I think the analyst expectations in terms of pre-sales velocity and what to peg in terms of numbers going forward as a collection estimate for the entire year, I think that still seems to be a little bit of a circumspect angle as we speak. And third, I think leverage has been relatively stable and constrained. But for any reason whatsoever, I think if the leverage component suddenly starts going off or the cash flow suddenly become a little bit volatile, I think the valuations then probably might look a little bit more dearer as we speak. So very, very stock specific. I think Phoenix, Godrej Properties is something where, in our opinion, the rating rankings at Markets of India still look relatively stronger.
Okay, all right. Mayuresh, one stock which was in focus was BHEL on account of the UFS news. Just give us a sense in terms of what you think of that stock at current prices.
No, so obviously, I think the UFS news has dragged the stock lower as we speak. But two major themes for BHEL in the power sector as a whole. I think what will probably happen in terms of the massive outlay that is expected to happen in terms of renewables over the next few years. We stand at 500 gigawatts with a mix of thermal and renewables. Renewables itself expected to be 500 gigawatts by the end of 2032. So I think a huge component of government capex is going to go behind the entire power ecosystem, and BHEL will be one of the major contributors there as well. The second element in terms of their own balance sheet, a large part of their slow-moving orders have either been written off or have probably been recognized in the balance sheet, and therefore I think any new orders that come through are and will be at relatively better margins. Now, if BHEL executes well going forward and it keeps its working capital cycle in check, I think the kind of moves that we probably see, the momentum can probably come back very, very strongly in FY27.
Okay, all right. So that's about BHEL, and of course we keep getting the live updates in terms of subscription as well. So that is something to take note of as well. Tomorrow it will be open for other part of shareholders for BHEL. Generally, what's your take on PSU banks, Mayuresh? Because that was one big mover yesterday. Today it did recover from the lows of the day, and we were having a lot of conversations with Nuvama. They have been speaking with FPIs at their summit that they have. The indication was that they're still very bullish in banking because of various updates that have come by, plus the fact that valuations are still reasonable.
Absolutely, and both the things are working in favor of PSU Bank Sonal as a space. I think if you probably look at numbers across the pack, you start right from State Bank of India right to the bottom of the pyramid. Leave aside a few players. I think Canara Bank probably disappointed within the mid-cap PSU names, but a large chunk of the players have probably delivered better numbers in asset quality, in terms of the CASA deterioration largely being behind them, in terms of NIMs probably being far more stable and improving going forward as well. Last but not the least, I think capital adequacy remaining extremely strong, whether it's the mid-tier names or the larger ones as well. And therefore, as a space, along with the valuation aspect compared to the larger private or the mid-private sector banks, they still look reasonably placed. The rating rankings look exceptionally strong for the space as a whole. And therefore, I think numbers have done the kind of re-rating that one looks at, if they keep on delivering these numbers going forward as well, specifically in terms of deposit growth, which is going to be a very sticky aspect for the sector as a whole, where PSU banks might actually stand out, I think they might actually outperform the BFSI space as well. Obviously, one thing to look out for, Sonal, is the banking sector reforms and what comes out of it.
Okay, absolutely a trigger which definitely the banking stocks will watch out for, which is in terms of the reforms. Thanks, Mayuresh, for joining in and giving us all of those stocks that you are tracking today. We're going to take a short break, but we'll get you all of the top corporate voices along with key market events to watch out for just in a short bit. Stay tuned. Welcome back. You're still tuned into Markets Forward on CNBC-TV18. Time to take stock of all of the big corporate voices of the day. Titan came out with a strong set in the third quarter. Speaking to CNBC-TV18, the company's CFO, Ashok Santalia, said that gold prices saw a temporary correction in January, during which the company witnessed strong demand for studded jewelry and now expects to close Q4 on a strong note. Santalia added, while the studded ratios has come down due to rising gold prices, the number of buyers for studded jewelry continues to rise. He also said that rising gold prices were putting pressure on margins, including the diamond jewelry segment, prompting the company to focus on lightweight designs.
SAMIL's whole-time director and president Pankaj Mittal told CNBC-TV18 that the company reported its highest ever quarterly revenue in quarter 3, driven by strong performance in emerging businesses. He said the recently acquired integrated assembly segment is also seeing healthy growth, expected to sustain with modules and polymer margins at 9.7% and integrated assemblies at 15.2%.
Jain Resources reported a strong Q3 performance, with management indicating that growth momentum is expected to continue. Copper capacity utilization currently stands at around 60% but is projected to improve going forward. The company is also planning to add more copper capacity and expects better margins from its new copper product lines. Management has guided for revenue growth of 40 to 50% by FY27.
And Gravita India's top brass told CNBC-TV18 that its 1200 to 1300 crore rupee planned capex would increase capacity to around 7 lakh tons by FY29. The company added that it would require an additional 1000 crore rupees for working capital. The entire funding would come from internal accruals with no additional debt being taken on. The company is on track to achieve 35% bottom line growth target by FY29 and a possible EBITDA of 1000 crore rupees.
Alright, and before we wrap, we'll bring you some key market events to watch out for. Sudarshan is here to tell us what to look out for tomorrow. Sudarshan, over to you.
So we are expecting some major data from US market. Non-farm payrolls, unemployment rate and crude oil inventories are going to be released today evening, and BHEL stock is going to be in the focus again tomorrow because OFS for the retail portion opens tomorrow and government is looking to sell stake up to 5%. Base size was 3%, and if government decides to exercise the green shoe option, it will sell another 2%. And as we are getting to the end of the earnings season of Q3 FY26, some of the major companies will be reporting its earnings earnings tomorrow, and those companies are Bharat Forge, Biocon, Coal India, HEL, Hindalco, HUL, Indian Hotels, IRCTC, Muthoot Finance, ONGC, Petronet LNG and PI Industries.
Okay, all right. So we still have some earnings to cater to. Thank you so much for joining us, Sudarshan, with all those names. So with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
इधर हाँ छोड़ ठीक है
Good evening. Thanks very much for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Range-bound session on Dalal Street. The Nifty holds 25,900. The Sensex underperforms. IT stocks under pressure. Auto stocks provide some solace to the Nifty benchmark index. The White House revises its fact sheet on the proposed India-US trade deal within 24 hours, drops pulses from the list of US products on which tariffs would be reduced, changes the $500 billion purchase commitment to an intent to buy. The portion claiming that India has agreed to scrap digital services taxes has been removed as well. M&M reports a steady quarter. Auto and farm business volumes grow by 27% on a yearly basis. The group's consolidated revenue crosses the 50,000 crore rupee milestone for the first time. BHEL shares nosedive on a day one of its offer for sale. The government aims to raise close to 4,500 crore rupees by divesting up to 5% equity in the PSU. This includes a 2% green true option. The floor price for the OFS has been set at 8% discount to yesterday's closing price. The government clarifies on its new IT rules that make prominent labeling of AI-generated content mandatory, announces a 3-hour compliance window for government takedown orders and 2-hour deadline for removal of nude images. Also highlights that routine editing of photos PDF using AI need not be flagged as AI-generated. Higher pilot-to-aircraft ratio and a higher crew buffer enables Indigo to comply with the new crew rostering norms after a 2-month leeway. The airline on an average now has 7 pilot-officer pairing per aircraft versus 6 earlier. Sources tell us that Indigo's pilot utilization and not headcount was the core issue behind the major disruption faced in December. Trump issues a fresh threat to Iran, warns them of aggressive actions if the country fails to reach a deal on an issue ranging from nuclear enrichment to ballistic missiles. Reports say Trump plans to send a second aircraft carrier to the Middle East. Lok Sabha leader of the opposition Rahul Gandhi accuses Prime Minister Modi of selling the nation over the India-US trade deal. Parliamentary Affairs Minister Rijiju rejects charges, hails Modi as the strongest Prime Minister, vows to file a privilege motion against Gandhi unless he authenticates the charges made inside the Lok Sabha by the evening. Paramount Skydown sweetens its offer for Warner Brothers Discovery amidst repeated attempts at a hostile takeover. Offers shareholders a quarterly ticking fee of 25% per share, but keeps its headline bid unchanged at $30 a share. 9 dead, dozens hurt after an assailant opens fire at a school in Western Canada, making it one of the deadliest shootings in the country's history. The suspect was found dead from a self-inflicted injury. Well, let's start with the day's market action. The Wall Street ending the day flat after a volatile session, with the Nifty ending above the 25,950 mark. Auto stocks led the race today, while IT stocks continue to be under pressure. Just about in the green, that's the Nifty for you. The Sensex closing 40 points lower, 118 points higher there on the Nifty Bank, and the Nifty Mid-Cap Index also closing just about in positive territory. Prashant is standing by to wrap up the day's market action for us. Fairly choppy, fairly volatile off its intraday lows, but finally closing flat, Prashant.
A quieter day after 2 days of very, very decent moves. So Monday, of course, was big. Yesterday, was up. The market was up. But as we pointed out, right at the word go, the close right at the open, usually it's in technical terms, it's called a doji. The open and the close are the same and indicate some sort of wariness, exhaustion, whatever you want to call it. And I think today we followed through in that same kind of fashion. So 20 points higher, 25,950 or so is where we ended. Mid-cap and small-cap indices absolutely flat, nothing very much. The IT index, of course, came under some more selling pressure. It's not as if after the earlier episode of severe selling, which was last week, they had any large bump up or gains. It just sort of, sell off, consolidation, and then another leg down, and that's what we saw with and you look at the large stocks which were off on the Nifty: TCS, Infosys, HCL Tech, all down. There's also Coal India, Eternal, which saw some profit booking. ITC's done well recently from the lows. That also gave up gains. On the upside, Eicher Motors was the big one. Apollo was the other one. So both earnings reactions. Apollo, of course, the management was with us. SBI followed through with another 3.5% gains. Superb numbers, of course, earlier. And there was Max Healthcare, which has been seeing a bit of profit booking, and that came back up.
All right, Prashant, many thanks. Now, the White House has revised its fact sheet on the proposed India-US trade deal. All of this within the last 24 hours. Now, the word pulses has been dropped from the list of US products on which tariffs would be reduced in the overnight revision. It has been replaced with the phrase, and I quote, a wide range of US food and agricultural products. In the updated document, the phrase about India's commitment to buy $500 billion of American products has also been changed to, and I quote, an intent to buy. The portion in the earlier fact sheet claimed that India has agreed to scrap digital services taxes. That has been removed as well. So that's the latest there on the US-India trade deal. US Trade Representative Jameson Greer has said that India could be a potential way station for US supply chains. In an interview with Fox News, Greer said that India was a viable option for companies seeking to diversify away from China. He also said that India had started winding down purchases of Russian energy products and ramping up purchases of American energy. Commerce Minister Piyush Goyal is likely to meet exporters and industry associations later this evening. Industry sources say the meeting will be aimed at discussing the contours of both the trade deal signed with the US and the EU. We'll of course be tracking that. On to earnings now. M&M's Q3 numbers in line with estimates. Net profit up 33%. Revenue rose 26% on an annual basis. Sudarshan is standing by to take us through the fine print. M&M details, Sud?
With Mahindra and Mahindra, an Argo company has come out with Q3 FY26 earnings. Both the segments, auto and farm segment, have been seeing healthy volume growth. It was up 23% YY in Q3 FY26. That has helped company to report a double-digit revenue growth. On the consolidated basis, Mahindra Group has reported revenue of more than 50,000 crore for the first time ever. Now, on the standalone basis, profit was up 33%. Revenue has increased by 26%. EBITDA too has seen a jump of 27%. And margin was in line with expectations and has come at 14.7%. Going forward in FY26, company is expecting tractor industry to see a growth in the range of 20 to 24%. Even SUV is going to see a healthy growth because the demand for the recently launched vehicles remains strong.
Sid, many thanks. Shares of EV maker Ather Energy declined in trade after nearly 33 lakh shares worth 233 crore rupees changed hands via block deal. Sources say the National Investment Infra Fund, the NIIF, was likely to sell up to 1.9% stake in the company. The stock closing almost 2% lower. Shares of BHEL tanking nearly 6% in trade. This after the government launched an offer for sale to divest up to 5% stake in the company. Under the OFS, the government will sell 3% stake initially with an option to offload an additional 2% stake in case of oversubscription. The floor price has been fixed at 254 rupees a share. Indian artificial intelligence firm Fractal Analytics' 2,800 crore rupee IPO was oversubscribed on the final day of bidding. This was led by robust demand from qualified institutional buyers section, followed by non-institutional investors. That's the Fractal IPO for you. Chinese automaker BYD has sped ahead of Ford Motors in global sales last year. This for the first time ever. Ford sold nearly 200,000 fewer cars than BYD as its sales fell 2%. With this, the Chinese auto company is now at the number 6 spot in the global sales rank. While Ford's US sales increased last year, the company lost ground in Europe and China, a significant milestone there for BYD. Higher pilot-to-aircraft ratio and a higher crew buffer enables Indigo to comply with the new crew rostering norms after a 2-month leeway. Sources tell CNBC-TV18 that Indigo's pilot utilization and not head count was the core issue behind the major disruptions that it faced in December. Shivani joins us now with the details. Shivani, what are the changes that Indigo has made that has allowed it now to comply with the new flight duty timing norms?
Well, yes, Indigo is back in full compliance with the flight duty time limitation norms, and the question today is what has changed since December when they were exempted from these norms. Sources tell CNBC-TV18 that the airline has actually raised crew deployment to 7.2 crew sets per aircraft in February. This is up sharply from under 6 per aircraft in November, December. One crew set, remind you, is one captain and one first officer, so 2 pilots. At 7.2 sets across 350 active aircraft, Indigo needs over 5,000 pilots to operate compliantly. Government data as of December 8th shows that the airline already has 5,000 plus pilots, which is 5,085 pilots on its roll already. So the pilots were always there. Headcount was not a problem. Utilization was. When the DGCA tightened night duty and rest norms in November, effective availability dropped. Indigo was operating at under 6 crew sets per aircraft, leaving almost no buffer in the system. Zero cushion whatsoever. So when duty hour caps were hit or sick leaves rose or weather disrupted schedules, cancellation snowballed and cascaded effects that we saw in December. Now, aviation experts say that resilient operations require 7 to 8 crew sets per aircraft. So by moving from under 6 to 7.2, Indigo has finally built back the operational breathing room. So it looks like Indigo is back on the FDTL track as of now.
All right, Shivani, many thanks for joining us. Up next, the government clarifies on its new IT rules that make prominent labeling of AI-generated content mandatory. That and more when we return. Now, the government has issued a clarification on its new digital content rules that make prominent labeling of AI, that's artificial intelligence generated content, compulsory. The government has highlighted that routine editing of photos, PDF using AI need not be flagged as AI generated. Ashmit joins us now with more details. Ashmit, take us through what the government is saying in its FAQ on the use of digital content.
Well, the government expanding on the scope of the notified rules that were put out yesterday and clarifying as to how and when these rules can be implemented. Firstly, as far as synthetic media or AI-generated content, the government defines it as per the FAQs by saying media that is defined that can appear like a real person or a real event that can possibly deceive a person into believing that it is real. That is something that will then qualify as AI-generated or synthetic content. But having said that, what is not on the government's radar are routine edits that you and I may make while clicking a photo, adding a filter to that photo, using AI for editing of PPTs or for editing PDFs. That is permissible, that can continue, no reason for concern there. However, the focus area for the government will be AI-generated content, especially illegal content. So what qualifies as illegal? Well, child pornography, obscene content, vulgar content. We'd seen only a few days back, Grok had been generating sexually inappropriate images. Images like those, content like that is something that the government is keen on targeting by way of these latest regulations. Not just that, the AI companies are also required to prominently label all content that is being generated via their platforms. It should have a very prominent label displaying that this content is synthetically generated or generated using AI tools. But that's not all. The rules also require social media companies to shoulder a part of that responsibility. The social media companies on their part will also have to verify whether content that is being uploaded by users is AI generated, and if it is suitably labeled as well. That responsibility will rest on the shoulders of social media companies. But having said that, there's more to it. The rules also prescribe for a tighter timeline that social media companies will have to work with. In case of nude images, that has to be taken down within 2 hours. Earlier, the deadline was 24 hours. In case of government takedown orders, that has to be actioned within a 3-hour time frame. Earlier, the time window that had been allowed to social media companies was 36 hours. So clearly a tightening of the time frame as well with respect to AI generated or synthetic content.
All right, Ashmit, many thanks for joining us. The standoff in Parliament continues. Lok Sabha leader of the opposition, Rahul Gandhi, accusing Prime Minister Modi of, and I quote, selling the nation over the India-US trade deal. Speaking in the Lok Sabha today, he claimed India's strategic autonomy is under pressure and that key decisions on energy and economic policy are being influenced by global power dynamics. Parliamentary Affairs Minister Rijiju rejected Gandhi's charges, hailing Prime Minister Modi as India's strongest Prime Minister. Speaking at a press conference later, he vowed to file a privilege motion against Rahul Gandhi unless he authenticates the charges made inside the Lok Sabha by the evening.
You have sold India. Are you not ashamed of selling India? Do you have no shame of selling India? You have sold our mother, Bharat Mata. Do you have no shame? But sir, the interesting thing is, I know that the Prime Minister would not sell India under normal circumstances. He will not do it. You know why he sold India? Because they are choking him.
Mr. Rahul, address to the chair, please.
He has sold India because they are choking him. They've got a grip on his neck.
आज तक कोई माइकल लाल पैदा नहीं हुआ जो भारत को सेल कर सकता है, कोई खरीद सकता है, ले हो सकता है। और आपने प्रधानमंत्री जी को कहा, मैं दावे के साथ कहता हूं, इस देश का आज तक सबसे मजबूत प्रधानमंत्री नरेंद्र मोदी जी है।
Well, fireworks in Parliament. President Trump has issued a warning to Iran again. Trump hinting at aggressive action if Iran does not adhere to the US's demands. Speaking to a news channel, Trump said, and I quote, either we reach a deal or we will have to do something very tough, end of quote. This comes after the Trump administration sent a large fleet of warships towards Iran. Reports say that Trump also plans to send a second aircraft carrier to the Middle East.
As you know, we have a massive flotilla right now going over to Iran. We'll see what happens. I think they want to make a deal. I think it would be foolish if they didn't. We took out their nuclear power last time, and we'll have to see if we take out more this time. They want to make a deal. They wouldn't talk to anybody else, but they're talking to me. But, you know, it's a good question. A lot of people say no. And I would say that I'd rather make a deal. It's going to be a good deal. No nuclear weapons, no missiles, no this, no that, all the different things that you want. But some people worry that they've been very dishonest with us over the years, right?
Now, Paramount Skydance has sweetened itself of a Warner Brothers discovery amidst repeated attempts at a hostile takeover. It has offered shareholders a quarterly ticking fee of 25 cents a share. Paramount has also said it will fund the $2.8 billion termination fee that Warner Brothers would owe Netflix if the deal falls through. However, Paramount has kept its headline bid unchanged at $30 a share. 9 dead, dozens hurt after an assailant opened fire at a school in Western Canada, making it one of the deadliest shootings in the country's history. The suspect was found dead from a self-inflicted injury. As New Delhi prepares to host the India AI Impact Summit 2026, hotel room prices in the national capital are going through the roof. In some cases, staying in the city to attend the entire 4-day event could cost upwards of 1 crore rupees, and that's just for accommodation. Timsi Jaipuri reports that this unprecedented surge in hotel tariffs has prompted the Tourism Ministry to step in.
New Delhi is gearing up to play host to between 15 and 20 global leaders, over 50 ministers, representatives from 40-plus companies, and nearly 500 leaders from the global AI ecosystem, along with their entourage when they fly in for the India AI Impact Summit 2026. The week-long summit, scheduled from 16th to 20th February at Bharat Mandapam, is expected to be the largest of its kind so far and has reportedly received over 35,000 registrations spanning more than 100 countries. So it comes as no surprise that this has sent hotel prices across New Delhi through the roof. Screenshots from hotel websites and popular booking platforms show that rooms which typically cost around 20,000 per night in March are now being offered at over 1 lakh rupees per night. In addition, availability is restricted to just a day or two in many properties. At some of Delhi's top 5-star hotels, prices have climbed to extreme levels. For the summit period, top-end luxury categories are being quoted as high as 32 lakh rupees per night, while mid-tier premium rooms are priced at 19 lakh per night or more. On online booking apps, even the starting price for available hotels is hovering between 20,000 and 40,000 rupees per night, far above normal seasonal rates. Peak demand is especially visible on February 19th and 20th when several 5-star hotels are sold out. Luxury suites and club rooms are priced even higher, often with strict minimum stay conditions. Marquee properties like the Leela Palace, ITC Maurya and Taj Palace have all raised tariffs significantly for the summit window. Hotels in central Delhi are seeing a similar spike in demand and in tariffs. Properties like the Imperial, Shangri-La Eros are nearly sold out between February 18 and 20th, with the handful of rooms still available are listed at steep prices. Travel platform Make My Trip, for instance, shows a room at the Imperial in Connaught Place priced at over 2.4 lakh rupees per night on February 17th. A room at the Radisson Blu, meanwhile, is listed at around 1.1 lakh rupees for that date. Taking cognizance of the surge, Tourism Ministry sources tell CNBC-TV18 that the government is holding a series of meetings with hotel associations. The concerns go beyond pricing. Officials are also worried about service quality, security arrangements and manpower readiness to host thousands of global delegates. Hotels we reached out to regarding these meetings have declined to comment. However, sources say that for the government, this spike in prices is a cause of concern. While Delhi wants the global spotlight, it feels the need to balance demand with affordability and service standards because hospitality costs should not threaten to overshadow India's ambition to lead the global AI conversation. In New Delhi, Timsi Jaipuri.
While the Home Ministry has directed that all 6 stanzas of the Indian national song Vande Mataram be sung first when the national song and national anthem are played together at government events, government school programs and other formal gatherings. The 10-page order issued to all states and union territories on the 28th of January included the official version of the song. This version includes the 4 stanzas that were not included in the song adopted by the Constituent Assembly. With that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC-TV18. Stay tuned. We're back with more right after this.